All right, here's the S&P 500 weekend update. And so I'll take a look at some indicators and see where we are now. But you can see here, going back to 2018, this is Volmageddon here, and then this is the 2018 crash. And so we have been underneath this bull market support line off the 2018 crash for a while, and we just got our second rejection off of this line here. And so this puts the market into an interesting zone. This could be a reversal, uh, and this could be a bearish reversal. And so I've drawn bullish and bearish really wide targets because that's this expanding high volatility zone that we're in here. And so for the bullish case, just climb up and try to use this as support. And then I would imagine if it can pinch all the way up into here, it would have to pop one way or the other out of there. And so that's kind of the bullish target, is to just kind of head up, and this is sort of the drama zone at the top edge of the range here. And then for the bearish case, you can see if it breaks down and gets a technical setup here. You have the moving average here. You have the 12-year bull market support line off the bottom of the 2018 or the 2008 crash here. So this is our financial crisis support line. And then here's the last bear target. So there's a couple things to contend with. You have to get out of this double topping zone here. Then you have the moving average. Then you have the long-term support line. And then here, pretty evenly spaced out, we've been hitting the bottom edge of this zone every year or so. So this could no reason that would need to be spaced on the timing like that. But this is a really dramatic bearish target, and I don't know if anyone would consider the bullish target dramatic, but that's the zone we're in here. So yeah, 3,700 for the bullish target and like 2,000 for the bearish target. So this is an insanely huge high volatility range. Let's get in on this thing. Take a look at where we are. Or I'll zoom in on the momentum so we can check it out. So you can see here the long-term momentum now has made it into the bullish side. So this is long-term bullish. This is bull market territory on like a two-year outlook. Now this whole crash has been undone on the momentum. And then if we zoom into the daily candles, this is more of a couple month outlook. And so it's on the bullish side of the chart, but it's not making a move right now. But that's okay. This is bullish, and it's not really doing much. So in order to get bearish, it needs to break all the way down, onto this side of the chart, and it's not making a move either way right now. So that's just a general bullish outlook. And then as we get into coming into the next couple weeks and this week, you can see on the momentum, it is on the bearish side and just weak and not really making much of a move. So pretty neutral, slightly bearish coming into this week. And if we take a look at where we are here, you can see that underneath this Volmageddon line, this is the 2018 crash support line that we're underneath. So we've rejected off of it about a month ago, and we rejected off again here. And then this is a double tap underneath this support line, could be pretty dangerous. And so I was pointing that out at the end of last week. But here we have this, kind of zone we're in. We did reject off of the line, and we're down in, this island top zone. So for a bearish setup, as soon as it breaks down here and gets resistance, this could be a setup for, bearish moves that could go here or here in a hurry. So this is a dangerous spot, and we'll have to see if we, break down under here the next couple of days, or if it gets back in here, kind of this area is sort of a drama zone. If you get up above it, that's bullish. If you get down below it, that is bearish. And so we're just kind of in the middle of here. So this should be a pretty interesting week to set up. I mean, this could be a long-term bull market territory here. And this is not quite bear market territory because we're still above the long-term moving average. And you can see the moving average is still heading down though. So if we break under the moving average and stay down, that would be getting more into bear market territory. And then if we broke all the way down under here, it would definitely be bear market territory. And that's a long way down though. So this could be a pretty interesting week on the S&P, just the setup. And there's a lot of things that have changed over the weekend. So I'll take a look at the DXY first. This is a breakdown underneath long-term support, and it hasn't broken way down. Let me just go all the way out to the weekly. So you can see it's breaking down underneath. This is like a 10-year bull market on the dollar strength against other currencies. And so this looks like it's trying to break down. And if it continues to break down, that's going to be a setup for, I don't know where, it could move into the 80s or somewhere. Like the dollar could get weak in a hurry if it breaks down out of here. But we'll see. Probably over the next day or two, we'll see if it stays here or not. And if it breaks down, that generally has been good for the stock market. And then you can see the yen as well is breaking down the dollar versus the yen. So the dollar getting weak should be an inflation indicator, and it's usually good for the stock market and should be good for the metals. And here we have Bitcoin. Bitcoin kind of squeezed into this wedge, and Bitcoin is doing a little breakout move. So that is cool. Bitcoin has been super boring for a long time, and now it looks like it's getting a bullish breakout setup. So this is a pretty cool thing for Bitcoin. And Bitcoin may actually get out of this super long-term mess it's been in and break out of here. And these are solid green candles. They're not like these little tiny wicks that reversed out last time. So I think we might actually get a bullish setup here for Bitcoin, which would make sense with a weak dollar. And then the infotech sector is flirting with its support line here. And let me get in a little closer on this so you can see. And so it's breaking down, and we can find out in a day or two if this thing is getting a breakdown setup. This could be really dangerous for the market if the Qs lead a down move. And it looks like it's breaking down off of the trend line right now. So if this gets resistance here today and stays down, that is going to be a bearish setup for this leading sector that's done the biggest move in the history of the stock market. And that could be really dangerous. And then you see the other sectors, like the IWM is just kind of chilling. Like it got a little rotation the past week, and now it's just kind of hanging out. I think financials is similar. Yeah, there's a little bit of a coming into the earnings. There's a little rotation into the weaker sectors, and they're just kind of hanging out. And it looks like the Q's maybe wanting to break down, and so the dollar fundamentals look like they're really helping the metals more so than the stock market right now. And then you can see gold. Gold did a little breakout move. It's getting near 2000, which is pretty wild. And silver did a couple of big breakout moves. And so yeah, it did a bull pennant move here. And the dollar broke down along with it. And so this is a preemptive kind of bet. I think everyone on silver expecting the dollar to break down, which I don't know if that's wise because the dollar, is right at long-term support. Like it hasn't broken down yet, quite yet, but it looks like it may break down now. Last week it did not look like it was ready to break down, but we'll find out in a day or two if the dollar is getting weak. And these gold, silver, and now Bitcoin are all breaking out, and the dollar is getting weak. And that's interesting though because I looked at the balance sheets, the Fed balance sheet, the Treasury general account, and the Fed balance sheet is not going up. It's been flat or down for over a month now, and they're just doing some Treasury purchases and some bond buying, but it's in the billions of dollars, not like the $4 trillion crazy thing that they did, several months ago. Like the balance sheet is flat, and the Treasury account is not coming down. They're not spending into the economy, so uh, the the Fed and the Treasury liquidity is not coming into the market for the whole past month. But apparently, the dollar is still outprinting the other currencies, who I guess are not expanding at all, or maybe even contracting their balance sheet. I haven't looked at the other banks. They may be actually contracting. I don't know what they're doing, but for the dollar to be breaking down when the Fed and the Treasury are not printing, it's kind of strange for it to be making a move like that. So that is an inflation indicator. I haven't looked at the VIX in a while. What is the VIX doing? Okay, so the VIX kind of found support down here above this gap, and so it hasn't broken down out of the high volatility range, but it's close to it. Yeah, you can see the gap back here. It's close to support again here, and so yeah, if we get a move down, I would imagine the VIX would pop up, and it looks like this is kind of the area to shoot for. We got the moving average and this kind of top area here across the previous tops. So this would be a pretty kind of obvious spot, 35 or 40 on the VIX if the stock market starts breaking down. And the VVIX, this is volatility of volatility, is not doing much. Okay, so that dollar index, it looks like an inflation indicator, and definitely silver making a move looks like an inflation indicator. But this is one thing that's interesting is that the Treasury yield spread continues to flatten out. And if you go look at some different time lengths on the Treasury yields, so you can see like the 5-year. Yeah, do it. So the 5-year is pretty flat, maybe breaking down a little. And then if you look at like the 10, it's more rounded. It's making more of a move down here. And then if you look at the 30, it's bigger, and it's making even a bigger move down. So you can see that the yield curve is flattening because the longer end of the yield curve is breaking down, and it looks like everything is breaking down. Like the whole yield curve is breaking down together and flattening out a little bit. So that is not really an inflationary indicator, and it's not pushing towards negative numbers. If it pushes into negatives, then that would be deflationary. But right now, it's just super low inflation indicator, and they're not printing, and the Treasury is not pumping helicopter money. But somehow the DXY is still breaking down right now, which is interesting. I'll have to check out the Bank of Japan and the Euros balance sheets and see if they're contracting or something like that. But yeah, right now it looks It looks like the alternative currencies, Bitcoin, gold, and silver, are breaking out hard, and that should be, those are bets on high inflation and the dollar losing a bunch of value, which could very well happen. But right now, the bond yields and the Fed account, the balance sheets are not really showing that they're pumping a ton of money right now. So it doesn't really look like that high inflation environment that people are betting on the alternative currencies. But we'll have to see. It looks like we may be getting rotation out of the stock market in general and into these other, metals and into the other currencies. And so I guess the big thing to watch for this week on the S&P is if we can break down into this kind of bearish spot here, or if we stay in this kind of boring zone for a while. But it looks like it wants to make a bearish move right now based on the momentum, and it needs to break down out of this zone in order to actually get a technical setup for a bearish setup. So that's the S&P and the Qs, and the Qs look much closer to a breakdown area. Yeah, as you can see here. This looks really dangerous for the Qs, and so if the Qs get resistance here and start moving down, I would expect the S&P to move down right along with it, and we could actually get a move down. So I think it's dangerous right now, but it's not quite a setup for a short yet, except maybe on the Qs. It's looking like a short setup, but that's that's a pretty brave move to short the Qs after looking at this crazy thing. It's just like a steady and grinding high angle sort of bubble line. Yeah, this would be very brave to short this thing right now, but it does look like it might get a technical setup to break down, so it's certainly something to watch. Oh, what's Tesla doing? I haven't looked at Tesla in a little while. Okay, so it came back down off of this. Yeah, you can see the last time I looked at Tesla was about a week ago, and it did popped out of the top, but now it's broken down out of this bubble. So Tesla doesn't really have. Oh, yeah. So it's kind of in the middle of nowhere right now, and I would imagine if the Qs come down, Tesla would probably come down with it. And so we have this kind of support line here to look out for. But yeah, that's about it on the market here. It could be a really interesting week, and if we get a bearish move and some volatility, I think people are going to start freaking out more, and that might even drive more money into gold and silver, as people seem to be worried about the dollar right now. Yeah, really wild. That's wild to see these breaking out when the Fed and the Treasury just are not pumping money right now. I mean, I would expect to see the balance sheets moving a lot more than they are. I mean, they're just sitting flat, but the currencies, I guess, are preemptively expecting a bunch of inflation. So we'll see if we get it. It doesn't look like it. So it's been such a weird market for the last few months, and this is not investment advice. Please like and subscribe. And from TradingView, please head over to my YouTube platform, and you can check out all my financial education videos and such.